agree, especially from the fiscal side, and which has more or less like calmed the heat. That gives us a certain platform to build on. We've seen inflation decelerating sharply from 23.8% to 11.5%. That end of August. That's good news. In fact, if you look at the rate of deceleration of inflation in 2025, and you compare that to what happened in 2017, you can see there's some science behind this, supported also by the aggressive strengthening of the currency and all of that. So, if you put all these things together, the expectation will be that the Cedi will stabilize. I think the Cedi jumped the gun in terms of the pace of the appreciation within just 3 months and all of that. When it happens that way, and you cannot situate that within broader structural transformation, economic transformation in the real sector of the economy, the expectation, in fact, and that is how speculative activity scales up significantly. And you will see that. We also saw that Bank of Ghana stepped in strongly. And in fact, on this show, we had indicated that Bank of Ghana was actively in the market.
Yeah.
Even though they denied that only for IMF to come and shine the light, we knew that there was some kind of intervention. We do not disagree with the central bank that they have the power and the locals to intervene. But at some point, you could visibly see the footprint of the central bank in the market. That causes distortions. When distortions occur in the short term, we expect that the market will correct itself. Because one basic function, and I've said it on your show, that one basic function of the market is price discovery, where the forces of demand and supply interact with some level of intervention. And that is why all over the world, you don't really see any country practicing pure flexible exchange rate regime. It doesn't happen anywhere in the world. Some level of intervention from the central bank or the authorities is meaningful. It to be expected under managed flexible exchange rate regime that we are operating. Okay. But its excessiveness, and also the timing, they took advantage. I want to believe that the central bank meant well. But given that there was subdued demand in the first quarter to the beginning of the second quarter, and also the expenditure restriction, government wasn't making payments, I think that there was a bit of a gap from the demand side, and therefore with some level of injection, the Cedi uptake became much stronger. So with that, we expect some level of correction. I think going forward, I'm quite positive about the outlook. Bear in mind also, let me gossip small this morning. Don't quote this. Nobody quotes gossip. Our headmasters are coming to town. The IMF is coming to town end of this month, all the way to first week of October or so. I think that it's important that we also erase our footprint in the market, because the fund had raised an issue about the excessive intervention in the market, right? So as part of the reforms and all of that, I think this is also to be expected going forward. If you look at investor sentiments, offshore investors who are preparing to participate in the bond market as government prepares to issue bonds, once we're able to scale the fifth review, we are going to get in excess of $360 million. That may not be enough, but scaling the fifth review consolidates the confidence that the economy is broadening and all of that.